Welcome to the Spotlight series. Don't just survive, thrive. Most of us have experienced challenging times, now more than ever. The key is how we choose to respond, whether we merely survive or thrive. My name is Nicola Steele, founder of JJP Talent Solutions, an Australian IT recruitment company. With over 20 years' expertise, I provide insights on how you can transform your career to the next level. However, we are not just our careers. We are spouses, partners, parents, friends, etc., with a variety of needs and wants. In this podcast, I talk to a diverse range of experts from different professions, such as finance, law, psychology, and health, to provide insights on how you can survive and thrive. I don't have all the answers. However, collectively, we can instill hope, clarity, and inspiration. I hope you enjoy listening. I'm delighted to introduce Cara Brett, a senior financial advisor and wealth coach. Cara is one of the founding directors of Bounce Financial, a boutique financial planning firm which specializes in providing advice to young business professionals and small business owners. Cara, thank you for joining me on episode 2 of the Spotlight series, Don't Just Survive, Thrive.
Thank you very much for having me. Lovely to be here.
My pleasure. So, Cara, please tell me a bit more about yourself and what you do.
Sure. So we are financial advisors and we see ourselves as overall strategic type of financial advisors. So we are at the usual things you would expect, things like super insurance investments, retirement planning for people, etc. But we have an overview in terms of this whole long-term strategic cash flow planning, because we think that incorporating people's lifestyle and goals in between now and retirement are really important, and that's probably our main focus. And so we work with a lot of people in what I consider the younger demographic, and I consider anyone between 30 to 50 quite young. So that's sort of who we predominantly work with, because there's a lot of things going on during that period of time, and we think we can add the most value there.
And I guess you sit within that demographic, so you've got a good understanding of what people are going through. For example, buying houses, having children, etc.,
yes.
etc.
Renovating, maternity leave, all of the things that everybody wants to do. So yes, very much so my demographic. So I feel like I can understand what everyone's going through.
We're now in a very unusual situation. And many people have been made redundant or stood down or had their hours reduced. So in the short term, what actions would you say that people should be doing with regards to their personal finances?
Yeah, I kind of have been breaking this down into two subsets, I suppose. The first is anyone who has immediately been stood down or hours or pay reduced substantially. That's obviously a huge impact for people at this point in time. And for some people, we're going from, 100K plus per year to nothing. And so drastic action kind of needs to be taken immediately for people like that. So the first thing that we've sort of said to do is review your expenses ASAP, cut things that are not mandatory. For some people, that's going to have to be relatively brutal, but we are in totally unprecedented times. So things like quitting your gym membership, which I think most people would have had to do anyway.
You can't go.
You can't even go. They've done it anyway. But things like that, things like any non-discretionary expenses. So to everybody, if there is something you're spending on that is over and above Netflix, because Netflix is $10 a month, and I understand if you have kids, that's going to be a pretty important thing to keep.
I was thinking the same, yeah.
It's $10, I can deal with that. But everything else that's over and above kind of needs to be cut pretty brutally. And that's sort of the first port of call that we tell people to do. Then it's about contacting providers so whether that's your home loan providers, whether that's electricity, anybody who you are paying bills to, and get on the front foot with either figuring out reduced repayments, figuring out repayment holds, and understanding what's available to you in that. And then the third thing is obviously if you have been stood down or let go, is registering immediately with Centrelink or with your employer in terms of figuring out which is the best payments to be applying for, because essentially money coming in the door is going to be really, really important for those people ASAP, and the process can take a little while, unfortunately. So that's sort of for the people who are immediately stood down, who are in a bit more of an emergency type situation. Yes. Second group of people are like, everyday, like you and me, for example, we still have jobs and we're still doing okay, but it's really important to be mindful of the things that are going on anyway, and still I kind of have this expression of plan for the worst and expect the best, which is I'm still reviewing my expenses down. I'm still making sure I'm not going too crazy and being relatively conscious of what's going on, because having a little bit of excess cash around is kind of important right now, if that makes sense.
To have that buffer. I mean, ideally we should, and I'm sure you'd advocate this, have a 6-month buffer, but many of us don't.
Don't.
And also talking to those providers you mentioned, that companies seem to be very helpful at the moment. Normally companies that might not necessarily be willing to have those conversations and help you out as much as possible.
Yeah. Well, I even got an email from my car insurance provider yesterday, and they said, we know you're probably not driving as much. Do you want a 15% discount? And I said, yes, I would. Thank you. And I'm not driving as much. You are correct. So some of them are actually getting on the front foot. Hence, you may as well make a few phone calls if you're stuck at home anyway to see what's available to you.
Absolutely. We've got the time to make those calls. I find quite often you're so busy with life that you don't have time to do those calls. You're getting on, you're working, you're looking after your kids, whatever, and making money rather than saving money. But we do have the time to do that. So going back to your advice to people that have been stood down, for example, and accessing those Centrelink job seeker allowance is, many of those people will have never been in this situation before. They are normally $100,000 plus salaries. So what's the process? What's the best way to go around that?
So the quickest and easiest way to get traction on this is to apply via your MyGov login. Now, most people, I would have thought, have a MyGov login to manage their, their tax returns at the end of the year, etc. And if you go through that process online, it's going to be quicker than going down to Centrelink or making a phone call, because they're going to direct you there anyway. So you may as well go down that process. If you provide all the information, and from my understanding, the requirements that they're asking for are substantially reduced for this situation than it would be if you were just normally applying for a job seeker payment. So they're basically requesting substantially less than they normally would, meaning it is an easier process than it would be. The only thing to be mindful of is there's so many people applying that processing times are just taking a little bit longer. Now, those payments will be backdated from when you needed it, but it's essentially one of those things, the quicker you get started on the process, the quicker you will get the funds, but it's just going to take a little bit longer than it normally would.
Actually, talking about government subsidies as well, the JobKeeper allowance.
Yes.
Tell me a little bit more about that and what stage. I think that's been approved now, where that is now.
Okay. Sure. So it has passed through legislation, which is really good. Far and away, the JobKeeper payment is actually probably one of the best ones available to people. And if you can get that, it is the preferred one. The difference between JobKeeper and Job Seeker is that Job Seeker is applied for by you, the employee, who is basically in control of that. You do that via your MyGov login, and you apply to Centrelink as if you're a job seeker. Okay. JobKeeper, on the other hand, is actually applied for on your behalf by your employer or former employer. So if you were working up until the 1st of March this year for your employer and they let you go, they actually have the option to bring you back and put you through this JobKeeper payment. Now, what that means is that they bring you back into the employment, but they're not necessarily paying you because you're essentially on leave without pay. And if their revenue and their turnover, for example, is 30% reduced or more due to this coronavirus, then it's going to be slightly different in terms of that based on the business, how long you've been in business, etc. Mm-hmm. Then they can apply to get this $1,500 per fortnight payment for the employees that gets directly passed on to the employees. So other than the tax component that needs to be taken out, because that is a pre-tax figure, that 100% is passed on to the employee, basically so that you get to keep your job, the employer or your boss gets to keep you as an employee so that when life goes back to normal and they need you there to be excellent employees, you are ready to rock and roll and you've been receiving some money to continue to help you during that period. Now, from all of the payments that are available, the JobKeeper is the highest one, meaning that if you are in a position to ask your employer to apply for that on your behalf, that is the better one to do. But if your employer's not in that position, then obviously we understand people would normally have to go down the JobKeeper payment system.
Okay, so with the JobKeeper allowance, you presumably would go back to work, would you?
The idea is, yeah.
Yeah. And I think, correct me if I'm wrong, I think it's $1,500 a fortnight. Actually, you might have said that.
Correct.
But say, for example, if you were on the equivalent of $2,500 a fortnight previously before all this happened, what are the options from an employer and employee perspective?
So there's a few things, and again, some of this is still just being shaken out, I suppose, with how it's actually going to look. If you're on normally $2,500, but they've stood you down, they may be able to keep you on as, let's say, leave without pay, and just pass that $1,500 directly onto you. Okay. And that could mean that you're still on leave, but you're receiving this money via your employer. So, perfect example is a cafe that's closed down. They can't actually work anyway. That money could just be directly passed on to their employee, even though they're not technically working. The other alternative is that your employer keeps you working at full-time capacity, and they basically, take the $1,000 out of their pocket to top up your payment so that you're up to your normal pay rate. So it's essentially them able to keep you on at a full-time capacity, but it costs them as a business less. Or they could bring them back on in a part-time capacity to the value of that $1,500. But the important part to note is that $1,500, regardless, 100% has to be passed on to the employee. So if you are under that $1,500 as a fortnightly pay, which I guess most people wouldn't necessarily be, then you have to receive that full amount, even if it's more than you would normally get. So maybe like casual employees and things like that.
Yeah, so it's got the benefit of obviously immediate. I think it comes into play the 1st of May and will be backdated.
That's what we're told, yeah.
Yeah, but you've got the benefit of having money coming in as an employee, but whether the person's working or not, when everything comes back to normal, whatever that may be, then they don't have to go out and re-recruit from an employer
Correct.
perspective.
They can basically just pick up where they're left off. And that's, I guess, from my reading of it and from what other people's reading, that's the government's idea is to keep people in their jobs so that when everything starts again, we can kind of just hit the ground running as businesses and as employees straight away so that the economy can start to turn over again really quickly.
And coming back to the personal finance aspect, one of the biggest concerns for most people, apart from putting food on the table, is obviously a roof over their heads, whether it's mortgage payments or rental payments. What options do they have from that perspective?
So I have encouraged everyone to contact their bank, regardless of their situation, to be honest, and just ask what is available in terms of if they have the option to move to interest only repayments, or if they have the option of what's known as a mortgage holiday. I consider the mortgage holiday a last resort because I don't think people truly understand what it is. And just to give you an overview, a mortgage holiday is basically saying, I don't want to pay any of my mortgage repayments for 3 to 6 months. This is typically what they're, I suppose, offering. Mm-hmm. But the problem with this is it's not just them saying, don't worry about paying your mortgage repayments. They're adding those repayments onto the top of your loan amount. So what happens is essentially you're borrowing that money over that 3 to 6 month period, and your loan value will increase by the end of this, which, if you didn't really know, and a lot of people don't realize this, will have an impact in how you have to pay it later. The other negative is that this can often affect your credit rating in the future to get other loans or whatever it is you're looking at doing. Now, the banks have basically come out and said that they're not going to hold people against this because of this COVID situation, that they're not going to negatively look at any future loans. However, that's now. And to be honest with you, I'm not 100% sure and wouldn't trust that that's how they'll view it in the future. When all is said and done, and 2 years from now, everything's starting to go back to normal, they'll go, oh, well, you had this mortgage holiday. I'm not I don't really think that you are a good candidate to lend to. So for me, I'm saying to people, look, consider that a last resort. But again, if you're in a really bad situation, I get it. The first port of call should be to ask if you can go to interest only for a period of time. So that can basically sometimes people halve how much their mortgage repayments are. And if that alleviates the pressure for a couple of months and you can manage to do so, then great, go to interest only for 3 to 6 months. And so that when everything goes back to normal, you can continue to pay. It should be a blip on the radar and shouldn't really affect your credit rating too much. So they're the two things that I sort of say, look, that's the first port of call. Also, given the interest rates, some of the banks are actually automatically, if you ask, reducing the interest repayable on your home loan as well. Even if you are in a fixed contract home loan, it's worth asking the question. If they're prepared to reduce your interest rate, take it. Like, why not? It might not necessarily be the best time to refinance because there's going to be more stringent methods that I think the banks are going to go through, because they're going to be asking questions about how secure your job is and all of that sort of stuff. But ask the bank for a reduction. Some of them are giving it, and I just think that's worthwhile. If you are renting, it's a little bit tougher. They're basically sort of saying that you can't necessarily be kicked out if you are going through some issues with this and with your employment. It's a little bit grey. For me, when it comes to this stuff, I would just say when it comes to owing anybody money ever and not being able to repay it, the best thing to do is to get on the front foot and contact the providers. And if the providers is a rental agency or your landlord or whatever, give them a call, let them know the situation, let them know what you can do. Essentially, everybody is looking for you to provide the solution to their problem. So if the problem is that you can't afford $400 a week, but you can afford $250, and will they accept that? Put it to them. Put it to their bank to think about their options in terms of how they can reduce their costs on their end. So it's not that we're trying to rip each other off or anything. It's just we're trying to keep people in houses, keep people paying their bills, but not, not absolutely putting people out on the street and making them destitute from this situation.
So basically, don't panic, don't stick your head in the sand, keep communication open.
Correct.
And going back to the rental aspect, I've spoken to a couple of people where they've been stood down, and the rental companies have said that they should access their super to pay their rent.
Well, I mean, I can understand why they're making the suggestion, because they want to get their money or they want to get paid. Yeah, this thing about the moving of super money, I guess the first part of it, there's no prescription about what that money would need to be used for. So if you qualify, And if you apply at this point, again, I don't think this one's 100% past legislation, but it's looking to in the next sort of 4 or 5 days. If you have certain requirements in that you've lost or reduced your income or your job, you have the option of potentially taking up to $10,000 this financial year and $10,000 next financial year out of your superannuation fund, and that is tax-free cash given to you from your future self, basically. And it doesn't have to be used for it can be used for anything. The downside of that is that the markets aren't doing particularly well. So pulling that kind of money out of your super fund is only going to make it worse. So for me, I've told people, look, this should be an absolute last chance option here. This should be after you put mortgage repayments on hold. It should be after you extinguish all of the cash that you have available, because this is going to have a detrimental effect to you in the long term if you do this. Now, I suppose rental agencies saying that to people is really just their way of going, well, I know that you can get some money that way, so that's a way that you can pay us. And I suppose that's really where they're thinking. But I guess people shouldn't think of this superannuation as a quick, easy way out, because it will have negative flow-on effects. And for us, we are definitely saying it should be last case.
Also, like, lots of people have got income protection. Can they tap into that at all? Is there anything that they can do there?
I do get a lot of questions about this actually almost every day. Unfortunately, income protection doesn't cover redundancy. So you're not going to get any payments on that side if you've got income protection. It does cover illness usually, which, let's say you did get coronavirus and couldn't work after a certain waiting period, maybe you would be entitled to receive some payments. But again, it depends on how severe and how sick you are and all of these kind of things. But in most circumstances, people are asking about it in relation to redundancy, and it just doesn't cover it.
Okay, so that isn't something that you can really turn to. However, if you have got that buffer, that 6-month buffer, you still kept your job, and you're in a good place, it would be a good time, I would suspect, to invest in the stock exchange, because that's at an all-time low. I'm no expert in this. So what would your advice be if you were in that kind of position, or even not in that position, but feeling tempted to invest?
You're right. It is a really good time, and I like to call it the market going on sale. So I suppose, like, for anyone who's already in the investment side, so who has established investment, who has obviously a continuing good job, who has excess cash flow, it's potentially a really good time to increase your investment strategy, right? So for people who already have an investment portfolio, they're increasing, putting in what they normally would. So let's say they're normally doing $100 a month, they might be doing $500 to $1,000 a month, just because right now bang for buck is really good. And there's lots of different ways to invest. You can do it direct with shares. You can do it in managed funds, in ETFs, whether you're doing it yourself or an advisor's doing it, right? But that investment shouldn't necessarily be a speculative, I'm just going to buy one share or whatever. It should be still this overall strategy about long-term growth. It's just that right now timing is really good in terms of if you want to do that. Same can be said, especially for business owners, but even for employees, is now could potentially even be a good time to put a little bit more into your superannuation fund, because remember, your superannuation fund is invested as well. And it's the same type of investments that are outside of super and on the stock exchange, as an example, are inside your super. And so that's kind of a double whammy. So again, you might contribute the normal amount you contribute to super. Might be a really good time to relook at that and think, can I make higher contributions? For two reasons. One, it should reduce my tax, which nobody wants to pay more tax. But two, the money going in is going to be invested in this lower market environment. So it's potentially a really, really good opportunity on that side. This is, however, with the overall assumption that you still have some excess cash around. So I have a huge caveat right now. And you said before, it's good to have sort of 3 to 6 months worth of money available to cover your costs, because, I don't know about you, but I'm going on week 5 of staying home right now, and that's longer than I thought it would be. So I dare say we're in for a little bit longer yet, and this could carry out. So having cash around is going to be really important. But for those people who haven't started an investment journey whatsoever, now could be a good time to start if they're secure in their job and they have that cash buffer. And you can start small, with either direct ways to get that through apps or small managed fund portfolios, or if you've got lots and lots of money, you can look at creating a huge diversified portfolio. But the important thing is to, when you do create that, is just to continue to contribute to it relatively regularly, and especially during this time, that's probably where you'll get the most benefit. So it can be bittersweet right now for my job, because I've got people who are in great positions who can really take advantage of this investment side, and it's really exciting to be able to do that. And then we have people who have lost their jobs, and it's horrible, and they're insecure, high-paying jobs in a normal situation, but this whole COVID thing has completely switched everything on its head. And so, it's two very different types of people, unfortunately, with this situation.
Yes, I read something on social media the other day that we're all in the same boat, but we're experiencing a different storm. So for some people, it's just a light trickle, whereas for other people, it's a huge hurricane. And I guess you're very much seeing that from a financial perspective.
Yeah. And I think the one thing that it is highlighted to me and confirmed in my beliefs is that it doesn't matter how much money you earn, whether you're a really high income earner or a lower medium income earner, having a cash buffer is important for everybody, because some of those high income earners, when if they're still living week to week in their $1 million homes, how are they going to keep the lights on next week if they have no cash buffer?
When this is all over and we have got back to normal, whatever that may be, what would your advice be from a longer term perspective? How should we be thinking and planning?
Do you know what? I think even if you're not back to normal, I think now is a good time to be thinking about these things. You might not necessarily be able to put in place all of the things that you could, but having a plan for the future is important. I think I put something on my social media yesterday where I said everyone's sitting at home right now, cleaning out their cupboards and sorting towels and all of this sort of stuff. It's a really, really good time to, I suppose, sort out some of your finance rubbish and make a bit of a plan going forward. So I did mention contacting providers and stuff, but now's a really good time to just assess all of your bills, reduce them where possible. But if you are stuck at home and thinking about the plan, planning for the future, it's a really good to sort of sit in the first instance and go, okay, what are our mandatory expenses in our life? And what are our discretionary expenses in our life? And what is left over after that? Because often I tend to find that, one, people like to stick their head in the sand when it comes to all things finance, and they have no idea what they do and don't have. But if you don't have a specific plan for your money, even if you only have a small excess each week, that money is just going to go somewhere else. So if you are stuck at home, and especially if you're in a relationship or a family or a couple or whatever, sit down and have a conversation about, all right, when we get, when our jobs go back to normal or whatever it is, what is it that we want to do, and how can we start taking the steps to get there? Yes, you should look at things like investing in the future and your superannuation, all those funny things. But actually what's really important is making sure that your money values and the way that you look at these things align, so that when you do set up a plan going forward, you can be successful. And I suppose the first part of that for me is going, how much does your life cost to live? What's left over? And then automate your finances as much as possible. And I think everybody can do that regardless of what situation they're in right now, because if you're living on JobSeeker or you've still got a really high income, you can still automate it and make your money work for you, regardless of how small or big it is at this point in time.
And also, I read one of your blogs recently, the How to Survive and Thrive Financially in a Post-COVID World. Absolutely love the title. So I think quite a lot of what we've discussed today, you've shared in that blog as well. And what I can do is share that in the show notes.
Yeah, that'd be great.
Together with the details for your website and your social media channels, which I think you mentioned to me earlier that you have videos that you share on Instagram, I think.
Yeah, so we actually provide a lot of content on Instagram. So we do obviously a lot of blog style stuff on Instagram with tips and information, but we do a lot of videos as well. And that's where we're trying to keep clients and people up to date with exactly what's going on with this situation, because, you know, every 3 days something changes. So from our perspective, what we're seeing financially, we're trying to pass on sort of on a day-to-day basis through that channel.
That's great. And keeping the change is absolutely constant. That is really the only constant at the moment. I feel quite fortunate that I thrive on change, but for a lot of people that would be quite difficult.
Yeah.
Well, Cara, thank you very much for sharing your insights and advice. I think it's been really useful for everyone. Is there anything else that you'd particularly like to share that you think would be helpful?
Not anything other than what I said before, which is prepare for the worst and expect the best. And it really does ring true to everybody, regardless of what situation you're in, because like we said, these are just really unprecedented times, but keeping a level head about things like money will help you in the long term.
I hope that you enjoyed this episode. Please remember to subscribe, rate, and review. If you're looking for career advice, your next career opportunity, or to grow your tech team, then please call me, Nicola Steele, on 0499 773 546, or go to our website, jjptalent.com.au. The Don't Just Survive, Thrive podcast is part of the Spotlight series, which includes the YouTube channel Spotlight on Software Development. If you want more insights into the software industry, particularly tech startups, then subscribe to the Spotlight on Software Development YouTube channel. Thank you for listening. Until next time.